And Bank of Indonesia expects the rupiah to be less volatile after issuing new rules that ease requirements for foreign currency buying for productive purposes and limit purchases for speculative means. Starting last week, bank customers buying a large amount of foreign currencies or forex are allowed to present documents of their underlying transactions on the date of settlement from previously on the date of transaction. The underlying transactions, which are used to prove the purpose of forex buying, vary from import bills and forex debt payments to tuition fees and Hajj pilgrimage costs. Bank Indonesia spokesman Devi Johansia told reporters customers who are well known by banks, as in banks having the customers' track records, can also preset documents required for forex purchases once a year, or when the amount of forex purchases have reached the equivalent of the underlying documents. The new rules also allow customers to buy US dollars to pay bills in Russian rubles due to the unavailability of rubles in the domestic market. However, customers are not allowed to buy dollars in lieu of forex available in the domestic market, such as the Japanese yen. The regulation also states that those without clear purposes will be forbidden to buy forex worth more than 100,000 US dollars per month, including customers who want to add to their savings. This revises a previous regulation issued in 2008, which required underlying transactions for forex purchases by individuals worth more than 100,000 US dollars in a month. Like now, the previous regulation was issued in light of the global financial crisis, which put some selling pressure on the rupiah and in turn threatened the currencies and overall economic stability.
The Philippines and other Southeast Asian countries have intensified talks on the integration of their financial systems, believing that this will complement the development objectives of the region and its members, the Daily Inquirer reports. Bangko Sentral ng Pilipinas BSP Deputy Governor Diwa Gunigundo said the integration, which was targeted for completion over the medium term, would cover capital markets, financial services, and payments, as well as settlements. Gunigundo said integration in these areas would help boost financial activities in the region. In the area of capital markets, the BSP official said integration would allow cross-listing of equities in stock markets in at least 2 countries. It would also allow an individual from one country to buy stocks of firms in another country. In terms of financial services, he said integration would allow banks based in the country to put up branches in another. In the area of payments and settlements, Gunigundo said integration would make it easier for an individual to pay for goods, services, or a financial product purchased from another Southeast Asian country. Integration will also entail a clearing system for cross-country payments. It will also hope to strengthen economic ties among Southeast Asian countries. Unlike the European Union, Southeast Asian countries are not keen on having a common currency or a common monetary authority, officials said. Asia is, however, moving towards making it easier for people in the region to transact business and engage in financial transactions across boundaries.
Myanmar is aiming to transform its economies with new laws to win foreign investors after half a century of international isolation. Sweeping new laws designed to attract foreign investment and reform the centralized economy are expected to be passed by Myanmar's parliament before the closely watched April 1st by-elections. They include tax holidays of up to 5 years, the right to lease land from state or private individuals for up to 30 years, allowing a 100% repatriation of their profits, as well as an expansion of rights to distribute products locally. For the first time as well, foreign companies will be able to open factories in Myanmar. Singapore-based TradeLink Engineering and Trading wants to diversify and build 2 to 3 new factories in the next 2 years, specializing in heavy machinery assembly, textile, and fire door manufacturing facility. This could potentially save the company 15% on import duty it paid last year, which amounted to $1.5 million. TradeLink Engineering and Trading Managing Director said, before the foreign investment law, there will be 2 or 3 companies in this market competition. He said after the foreign investment law, there may be as much as 10 or 20 companies competing in the Myanmar market.